Hi, it's John Kelly. In this module, we are going to discuss communication with those charged with governance. And as always, we want to be efficient and effective, we want to follow professional standards, and we want to document what we have done properly. Now, those charged with governance, and it's going to depend on the organization of the client, but it could be management, and sometimes when we're talking about communication with those charged with governance, it's only management. At other times, and depending whether all of those charged with governance are also management or not, it could be the board or it could be the audit committee. It also could be the owner-manager, a sole shareholder. So we have to be a little careful here when we're communicating to make sure that we've communicated with all of those that we should communicate with. And it'll be more complicated if it's a public company with a board and an audit committee than it will be with an owner-manager who runs his own business, because it's really easy to figure out who is charged with governance in that last very simple circumstance. So these are the things we're supposed to communicate in accordance with the section. We're supposed to communicate our responsibilities for doing the audit, and that's probably simplest put in the engagement letter, particularly if we do an annual engagement letter. We have to communicate and make sure that management understands that they are responsible for the financial statements, and that also can be in the engagement letter. We're also supposed to provide an overview of the planned audit, and we have to be a little careful here. A12 says, well, be careful, don't tell them too much about what you're going to do, or you may compromise the audit. We're supposed to be unpredictable. Management's not supposed to know all the details of what we're doing, so let's not provide too much detail. And that could be done in the engagement letter. You could just simply say we intend to do the audit in accordance with generally accepted auditing standards, and that means it'll include such procedures as we consider necessary in the circumstances. Maybe a bit more than that. If we have any audit findings, we are to communicate them. If we have views on their choice of accounting principles, we might communicate. So we'd communicate if we had any views. Audit difficulties, if we thought there were significant enough difficulties, we should tell someone. So we do that if necessary. Significant matters discussed with management, if management and those charged with governance are different groups. Here's a tricky one. You have to tell those charged with governance the representations we wanted from management. So if the two are separate, if you have a public company, or even trickier if you have a not-for-profit organization where there's an independent volunteer board and employed management, we may have got the representation letter from employed management, but we also have to let the board know what we wanted. So either get someone charged with governance to sign the representation letter, which may not be a bad idea to emphasize the board's responsibility for the representations about the financial statements, or send them the copy, one or other. And we probably need a checklist prompt to remind us, because depending on the client's circumstances, there could be different ways of accomplishing that. There are other matters that we might want to communicate, and if we had any, we would do so. We have to communicate about our independence, but only if it is a listed company, a public company. So if listed, we'll have to remember to do that, or alternatively, you might just decide that you're going to communicate about independence with all audit clients, even though you don't have to do that. So that's going to be a choice the firm is going to make. Now, as with many other sections, documentation requirements or things that you have to do are in other sections. So other sections require communication with those charged with governance, and they are listed in the appendix. And we'll just go quickly through this. Standards for quality control require that you advise the client of the name of the partner assigned, and perhaps you could do that by having the partner sign the engagement letter. You have to ask those charged with governance if they know of fraud, and that could either be in the representation letter if someone charged with governance is signing it, or it might need to be a separate letter, or it might just be a note in the file. There are requirements if you withdraw, but that's unusual. If you find fraud, you would, of course, tell management. So you do that if it's applicable. You might want to have in your checklist a reminder, have we told those charged with governance if we found fraud? And most often the answer is going to be, well, we didn't find any fraud. But just to remind yourself, in the circumstance when you did, you've got to tell those charged with governance. We have to ask them if they know of any illegal acts, and we might have that in the representation letter. There are matters if we find illegal acts, and that's, if applicable, there'd be separate communication and maybe a checklist reminder, and the same thing to those charged with governance if you find illegal acts. Uncorrected errors, including the prior effect, have to be communicated, and that has to be in the representation letter, so there's not much choice there. If you believe management is being unreasonable and not letting you confirm accounts receivable, you would inform them. That's unusual. Opening balance misstated in an initial audit, so we're the new auditors this year and we find that last year's numbers are wrong. That's also unusual. And significant matters re-related parties, that's also unusual, but perhaps there should be a checklist prompt. Did we find it? No, we didn't. We have to ask about subsequent events and read the minutes, and that should be in our subsequent events checklist and in the representation letter. We need a checklist prompt to remind ourselves. And then a number of other matters that are rare, matters after the report is issued, telling management to fix the financial statements if after they're issued we've found a mistake or been advised, and what we do if management won't fix. Those are all rare. Going concern, if there are issues there, that has to be in the representation letter, and that's probably not a bad representation to have at all times, that management represents that they believe the company to be a going concern, or not if they don't. Things about group audits, what to do if your opinion is qualified, have to let them know before you do it. If you have an emphasis of matter paragraph, you might advise them, though perhaps just the appearance of the emphasis in the matter paragraph in the report constitutes that. Misstatement by a prior auditor, that's rare, and prospectuses are a highly specialized section. So, thanks for listening.